So my able professors, today in our accounting lesson, we are continuing with the accounting equation. And I hinted the last time that we'll look at the double entry principle as well. But before we look at the double entry principle, it's important that we appreciate business transactions and how they impact the accounting equation that we saw the last time. So quickly, let me do this for my professors as a way of revision the last time. So to the best of my knowledge, the last time we looked at assets, we saw the types of assets, given examples in each case. We saw liabilities, and then the types of liabilities. Okay. And last time, I think I gave an assignment and all of you did very well, very well. Only a few people had some -1. Okay. Now today, I want us to still look at something around the accounting equation: asset equals capital plus liabilities. Why am I bringing back this theory? I'm bringing it back because we also need to appreciate some two other elements of accounting, which are technically hidden in the accounting equation. But we need to acknowledge it because as we begin to look at business transactions and how they affect these elements of accounting, would be required to look at some of these or these two other elements. So these elements are: one, expenses, and then income or revenue. So if you remember the last time, I hinted that I would have to take you through these two, know what they are, also look at how they are embedded in the accounting equation. So basically today, we'll look at these two elements, define them, list examples, and also I'll take you through business transactions and the effects they would have on the accounting equation. Okay, so the effects of business transactions on the accounting equation. By that I mean a business transaction can increase the asset or decrease the asset or increase capital. Okay, so we'll look at those effects. So the effects are either an increase or a decrease. Great. So these are things we are going to discuss. If we have time, then maybe I will add the double entry principle. Great. So let's dig in with what expenses are and what income is. Let's pick the first, which is expense. I want to believe professors are aware of this word or term. So let me hear my professors on what expenses are. What are expenses, professors? Expense. We incur expenses or we pay for expenses in our daily life. What is an expense? Yes, Prof. Portia, go ahead quickly.
So please, expense means the money we've used out of the business.
The money we've used out of the business. Okay, that's a great idea. Prof. Akoli Mensah, let me hear from you.
Okay. Sir, please. Sir, please. Good morning.
Good morning.
Sir, please. Expenses are the costs we are engaged in.
the cost we engage in. For lack of, can you change the word engage?
We as course we incur.
Okay. Okay, no problem. So thank you for your submission. So when we say expenses, they simply refer to the costs incurred by a business in the provision of goods and services to generate revenue or profit. So the cost that a business incurs in the process of making goods and services available to customers to gain profit is an expense. So for example, the Indomie seller would have to go to the gas filling station to fill up the gas to be able to prepare the Indomie to be given to customers. Okay. And as she does that, she's going to get profit, because when you sell to the customers, they pay you, you get some income or profit. So you see that the Indomie seller is incurring the cost of filling the gas cylinder because she wants to provide Indomie to customers to get some profit. So expenses are the costs a business incurs in the provision of goods and services to generate revenue or profit. Examples of expenses. In fact, we have a lot of examples of expenses, but I'll try and make or group them into the following. But before that, my professor should talk. At least each and every one of you here should be able to give me one expense. So let me start from Prof. Eugenia. Prof. Eugenia, give us any expense you know. I think, Eugenia, you may have to come again. We didn't hear you.
Yes, please. Cash.
Prof. Eugenia says, did you say cash?
Yes.
Okay, so I think Prof. Eugenia would have to watch the previous video, because we concluded that cash is an asset, right? It's a property. It's an asset. Okay.
Yes, this is my first time.
Your first time. Okay. So it's well understood. Then you need to watch the videos in the group, right? Okay. Prof. Akoli Mensah, yes, your expense.
Yeah, please, rent is part.
Rent. Thank you very much, Professor. That is great. Rent. Number 2, who is going to do the second one? Prof. Zoe. Are you going to tell us the next expense?
Salary.
Salaries. Okay. So let me continue with the list. So we have salaries, we have rent, we have insurance, advertising, delivery expenses or travel and transportation. In fact, we have a lot of expenses, but we can categorize them into the following. Okay. So the first categorization I would give would be administrative expenses. Administrative expenses. Administrative expenses. And this has to do with, so examples of such expenses include stationery, okay, printing expenses, of course, salaries, okay. In fact, all costs associated with administering or taking the administration of a business, okay. So we have those administrative expenses. We have selling and distribution expenses. In fact, the administrative expenses are plenty. You have your lighting or electricity bills, all those utility bills, they are part of it, but we'll delve much into it. We have selling and distribution expenses like delivery because you have to sell your goods, you have to deliver to your customers. So delivery expenses, advertising, all these are associated with selling and distribution of goods and services, right? Wait. Then we have the last one, which is the finance cost. Finance cost. Now, these are little expenses we incur, not because we are selling or distributing goods, or we have to manage or administer the business. Okay, but these are petty costs incurred. For example, we have bank charges, because we are having an account with a bank and they are giving us checkbook, Visa card, etc. We have to pay what do you call bank charges. Okay, so these are the various expenses you come across. Professors, there are a lot of them. Telephone bills, in fact, repairs and maintenance. Okay, now the difference between expenses and assets are that assets, are resources or properties, okay, that seeks to benefit a business in the process of making goods and services available. Okay, but expenses are more or less like the cost you have to incur because you are providing or providing goods or services to make profit. I don't know if it makes sense. Okay, though they all have a similar nature in the sense that whether you are paying for an expense or you are buying an asset, it has to do with the business losing something or having to give something. Okay, but the benefits with expenses are not so much of that of an asset. Okay, and again, sometimes expenses are incurred because we have to undertake the activity of providing goods or services. Now, let me make this example in a way to make the differentiation clear. If I'm an Indomie seller, right? First of all, I need a gas stove, I need a gas cylinder, I need a kiosk or maybe a shop. Now, these items I've mentioned are assets of my business. Okay. Whether I produce or whether I prepare the Indomie or not, my shop will be there, right? My gas stove will be there. Okay. But let's look at filling the gas. If I don't prepare Indomie, then there'll be no need for me to go and fill up the gas. Right? In other words, filling of the gas becomes so crucial because I have to prepare the Indomie for my customers to get profit. Okay, so that is one clear way you can distinguish between expenses and assets. Please, any question on this one? Because
No.
okay, great. So these are expenses for. Let's go to the other one, which is income or revenue. Income or revenue. And I think my professors will try to tell me what income of a business is. Income or revenue. Yes, which of my professors will tell me about income? I may have to call. Is it Prof. Francis Oklu? Any idea as to what revenue or income is? Yes. Okay, Portia has her hand up, but I wanted Prof. Francis to share. So, Prof. Francis. Okay, I think Francis is enjoying some ice cream, so he doesn't want to talk. But when you are done with your ice cream, you definitely talk. Let me also call on Prof. Bridget. Okay, so I see someone type that's from Prof. Selike. Income is money or value that an individual or business entity receive in exchange for providing goods or service through investing capital. Okay, that's an awesome submission, Prof. Selike. But Prof. Bridget, can I hear from you your version of an income? Professor.
Yeah, please. An income refers to a money earned or received by an individual.
Okay, so income refers to the revenue, right, earned by a business, okay, from the provision of goods or rendering of services, like Selike put it. So it's what we actually earn from providing goods or services. So here I'll define income or revenue as the earnings of a business from the provision of goods and services. Okay, what a business earns from. So my Indomie business, anytime I sell and my customers pay me something, and after deducting the cost, there is a leftover. Okay, then I can really appreciate that as a profit, right? But when they pay me, the amount I receive for giving them the Indomie is the income or revenue. And I believe that is also okay to ask professors. Again, I could also go to the bank and invest some of my cash or my Indomie business cash in treasury bills or any form of investment, right? And I'm going to earn some interest on that investment. That is also an income to my business, right? So talking of income, examples include, okay, sales revenue. When I make sales, like I said, when I sell the Indomie, right, what I get is a sale revenue or sales revenue. I can also be receiving commission. Maybe a certain gentleman has Indomie, has all the ingredients, but he doesn't know how to prepare it. So he will come to me to prepare for him and take a little commission, right? So that commission I receive is also an income. Or like I indicated, interest on investment. I make investment and I get some. Okay, so professors, these are the concepts of expenses and income. Now I want to tell you something. When we take our equation assets equals capital plus liability, these two elements also affect this equation. I mean, expenses and income also affect these three elements, right? But they affect, most importantly, the capital of the business. That is to say, expenses and income would help you generate or determine your profit or loss from the business. So let me repeat that point. If any business wants to determine profit or loss, the business will compare two things, and that's the income and expenses. Okay, the income and expenses. Now, professors, if you make a profit in your business, that profit would increase your capital. But if you make losses, it is going to decrease your capital. So you appreciate when people say, oh, I started a business, but all my money is misikanashi, okay? Or all the money I invested in my business is gone. Why? Because if you investigate, you know that the person is making losses. But when you are making profits, it means that, oh, business will be booming, so your capital would also be increasing. So the point I want to make here or establish here, and I want you to note, is that profits or losses affect the capital of the business. And like I've indicated, the profit would increase capital, while losses would decrease the capital. Now, if we look at the elements that help us determine profit or loss, income, okay, income is the one that will make the business get profit, because if your income is more, you get more profit. So that is to say, income also affects capital positively, and expenses affect capital negatively. So if we want to include these two elements in the accounting equation, this is how it's going to appear. Okay. This is how the equation is going to appear. Assets are equal to capital. Okay. Capital. At this capital, we add income. We are adding income because income affects the capital positively. Okay. Then we less or we deduct expenses. Then we add our liability. So you see that I've added something new to our accounting equation. And what I've added is income and expense. And what I told you is that the income and expenses affect the capital. Income affects it positively, or it increases capital, okay, while expenses decreases capital. This is that point well with my professors. Any question, professors? Any question? Okay, so professors affect the accounting equation. And I've just indicated to you that they normally affect the capital, right? So they don't affect the other two elements, i.e. assets and like. Okay, no questions. That's great. So now that you appreciate the extended version of the accounting equation, as I put it, you should be very comfortable in the next thing we are going to look at, and that is the effects of business transactions on the accounting equation. We'll do that in the next session, like I have indicated on the page. So let me make some quick comments on that, and then maybe I'll let my professors join the second session. But if you have any question, please let me have your question.